welcome to today's video presentation. Gold just hit an all-time high at $2,484 level, and while we missed out on most of the recent pullback, price action is now within a zone known for its robust buying power in the last couple of weeks. And if you look at what we have on the screen right now, this was actually our trading setup prior to the beginning of last week, where we were looking out for that uptrend continuation situation. And if you look at what we had here, as at the beginning of last week, we were able to capitalize on that bullish momentum right at the break of the 2004-15, and of course we did ride that momentum all the way into the 2004-80 before that bearish momentum began. And in fact, I personally missed out on this selling opportunity, as I was of the opinion that price was doing a retracement in anticipation of the uptrend move. Though we were able to continue the bearish move below the 2425, so we saw this 300 pips move to the downside. In fact, for educational purposes, you can find a detailed breakdown of each of our entry points in the description box of this current video. So, in preparation for next week, it is obvious that the Fed's plan to cut interest rate has finally increased, driven by their belief that inflation is under control, continuing to support a long-term bullish outlook for the gold commodity. However, last Friday was a gloomy day for gold, as profit booking was the order of the day. This was fueled by political uncertainties in the United States, leading to a strong US dollar recovery, while the US Treasury bond yield held steady above the 4.2%. Political uncertainty surrounding the possibility of Donald Trump returning to the presidency has intensified, boosting the US dollar due to Trump's known support for trade policies that protect American businesses from foreign competitions. With a resilient US dollar at the end of last week's session, meaning that gold is more expensive at this point, and the Fed's expected station to ease policy by 50 basis points later this year, what is the future of the gold commodity in the coming week amidst these contrasting market conditions? In this video, together we are going to be dissecting the current market dynamics, taking into account various components, including the technical analysis overview, to identify the major trend, key level for the coming week, and structural patterns to guide our independent trading concepts. But before we begin, as usual, it is important to note that this presentation is purely for educational purposes and not to be considered financial advice. Forex trading involves inherent risk, so proceed with caution and always seek advice from a qualified financial advisor before making any investment decisions. With the groundwork laid, let's dive right into the business. So, to have an holistic perspective into this market, we are going to be starting our analysis from the daily time frame. And for those of you who have been with me for a while now, the setup on the daily time frame still remains the same after taking into consideration the character of price action since the month of October of last year, giving us this beautiful ascending trend line to work with. And as long as price remains above the ascending trend line, it makes a lot of sense that we continue to look out for buying opportunities. However, if we take into consideration the character of price action in the last 3 to 4 months now, that's since the month of April, you will see that price action, or let me say trading activity, was sandwiched within the 2,450 and the $2,265 area to emphasize the prevailing uncertainty in this market during this time frame. And of course, this is not coming to us as a surprise. We all know that price is within uncharted territory. We are within all-time high area, and it is expected that out of a fear that the market might crash from this level, market participant will want to be taking some profit at every point in time price moves a little bit higher. And this usually leads into consolidation phases, choppy market condition, or even a retracement move. Now, within this whole choppy market condition, remember a couple of weeks ago we saw this beautiful descending trend line broken to the upside. As you will see here, we saw the price break out of the structure right here, and this breakout led to that all-time record high at the 2,484 level. Now, from a theoretical standpoint, whenever price breaks out of a key structure like this, we do expect that some point in time price may retrace to that structure at some point, maybe to retest it in an attempt to continue the uptrend move. Now, the question going into the new week is, will price do the retracement back into structure? Or are we going to see a situation since price has broken out of that supply zone to incite an uptrend continuation? Now, to guide our trading decisions for next week, it's important we mark out our key level. And for those of you who have been with me for a while now, you know how important the key level is for the upcoming week, as it usually serves as a yardstick guiding our trading decisions, where if price remains above the key level, we want to be looking out for structures that will guide buying opportunities. And if price breaks down the key level, we want to be looking out for patterns and structures that support the idea of selling. So, in preparation for next week, my key level is situated at that psychological area at the 2,400, a level which has been a strong selling niche since the mid month of April. As you will see here, every attempt by buyers to break out of the structure has always been met with strong resistance from the sellers. And not until last week, we finally saw price break out of that structure. Now, going into next week, we are going to be looking at if this 2,400 will be a platform for new buying opportunities to find another high, or are we going to see a situation where it's going to be broken to the downside, where selling pressure below structure could incite a sell-off back into that trend line that was broken a couple of weeks ago, or even drop to as far as that ascending trend line. Now, to navigate this current market dynamics, we need to see how the market will react to that key level at the beginning of the week. And of course, to position ourselves appropriately, I have a simple trading setup on the 4 hours time frame. But before we scale down into the 4 hours time frame, it is time to pay attention to upcoming economic events that will influence market sentiment next week. And by checking the economic calendar, we can identify how upcoming events might affect price action. This helps us spot potential correlations between key economic releases and specific technical patterns on the chart, allowing us to time our positioning more effectively. Now, in for next week, and considering the asset we are looking at, we will be focusing on high impactful event from the United States economic docket. Now, the first high impactful event will not happen until Wednesday, July 24, and that is the S&P Global publication. You see, this data here gives us an insight into the health and performance of the service and manufacturing sector of the US economy. And these reports provide valuable data on factors such as business activities, new orders, and employment levels, which can directly influence how the market participant will behave prior to that event. Then on Thursday, July 25, we are going to be looking at the gross domestic product annualized for quarter 2, which is usually expressed in annual growth rates. It measures the total value of goods and services produced in the United States during the second quarter. Fast forward to Friday, July 26, we are going to be looking at the core PCE, a data which is considered to be an inflationary gauge as it measures the average change over time in the prices paid by consumers for goods and services. So these are the events we are going to be looking forward to next week. And of course, the anticipation of this event has a way of influencing how market participants are going to behave. And of course, this will reflect on the chart as price action. Now, talking about price action, we'll scale down into the 4 hours time frame. And right here on the 4 hours time frame, what I did was to consider the character of price action in the last 3 to 4 weeks now. And after doing that, we have a beautiful trend line, which obviously emphasizes the strength of the buyers in this particular market, as you will see here. And of course, you know how we treat our ascending trend lines. As long as price remains above the trend line, we'll continue to look out for patterns and structures that support the idea of buying. Now, looking at this structure closely, you will see we have our key level still very much intact at the 2400 area. And look at how beautifully that level has supported buying pressure in the last couple of weeks. We saw what happened here 2 weeks ago. We saw a breakout retest, price found an all-time high. And look at what happened during the last day of last week. Price, as soon as it got into that area, we begin to notice buy pressure resume around that structure. Now, the question is, will buy pressure persist here to incite another wave of bullish momentum, or are we going to see this trend line broken and retested to incite a downtrend continuation? Mind you, if you see what happened here last week after price tested an all-time high, we had a structure that looks like a double top structure, which I actually missed. And look at the neckline of that double top structure sitting at exactly the 2004.55 level. Now, price has broken down the neckline. If buy pressure resumes around the 2400 area, we may likely see price retrace back into the 2455 level, which will be dovetailing to a minimum of 530 pips to catch there, which is something I want to be placing on my radar for next week. So if we see any form of buy pressure here or form of reversal setup like a double bottom structure, we want to be capitalizing on an uptrend move at least into that neckline. And if instead the breakdown of structure happens, price will have broken down both the ascending trend line and the key level at the 2400 to incite a sell-off. So you would agree with me that based on the technical information we have here, we are at a crucial confluence where, depending on how market participants react to the structure at the beginning of the week, will determine how we are going to be, if we are going to be buying or selling at this point. Trust me, I will be with you in the comment section of this video during the early hours of Monday after monitoring how market participants react to this particular structure to give us an update on how we will be positioning ourselves for the next move. If you have found this content helpful and useful in making your independent trading decision, I will greatly appreciate your support by giving the video a thumbs up. In fact, your likes are valuable to me and it goes a long way in helping the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.